What's up, team? Chuck with Traders War Room, and I'm back at you with another video. Listen, this is your Friday market wrap up, and I got a great video in store for you. But what I need you to do right now is hit that like, share, and subscribe button, and I need you to come with us on this journey, man. We got a lot of great things happening. Check the description for all the links to all the content within this video, and let's get at it. So as always, if you're ready, follow me, and let's go to war together, team. Traders War Room wants to remind the viewer that all content on this channel are for education and entertainment purposes only. You are responsible for every move you make in the stock market. Have fun, tread cautiously, but definitely go to war and let's get it. All right, team, welcome back. As always, man, I'm ready to hop right into it. Let's start off with our normal and get into the buzz report. All right, and so here's how the market's closed out. And remember, we're still paying attention to the bond yields, but the bond yields aren't looking that bad, but definitely red across the board, and it was a big sell-off. Market movers and shakers: AMD most active, MCAF top gainer, and SAVA top loser. We're going to talk about AMD and SAVA later in this video. Sector performance, as you see, not too many of the performance sectors were green, so I'm expecting next week to probably see a little bit of rebound. But listen, cannot just pay attention to one day. You got to look at that 5-day too. And if you notice on the 5-day, all of them were up significantly, a little bit more than they normally were. So definitely we're looking at next week, hopefully to have a little bit more green than we definitely finished off this week, but we'll have to see what the market has in store for us. Futures, and you know how I feel about futures, especially over a weekend. Look, this is just a glimpse into what could potentially be something. It's to give us some planning and some strategy moving forward over the weekend as we do our DD and get prepared for Monday to get out there and kill it. All right, and what you got here is your total premium calls versus puts of the big boys. All right, now I want you to pay attention to this. The green, obviously, that's bullish. The red, obviously bearish. And I want you to see, Tesla and Amazon lead both the bull and the bear race, respectively. But I want you to pay attention to the numbers that are in there, okay? A lot more bulls are betting on next week than bears. So let's pay attention to this. But I want you also to notice, we talked about this a little bit later when I'm talking about indexes. Amazon, huge, it's juggernaut, man. It can pull down an entire market, and we saw that today. Look at the bearish calls on Amazon going into next week. So definitely take that in consideration, especially if you're doing calls or puts on indexes. All right, and your top news is the S&P notches 6 straight monthly gain, even though as Amazon has disappointment and it fuels the Friday selling. Listen, one thing I really want to hit home on this is these huge juggernaut companies, your Microsoft, your Facebook, your Apple, your Amazon, these big ones, right? They have such a large market cap that when they're having a crappy day, it could pull that particular index down, even if the other lower market cap stocks are having a great day. So pay attention, especially if you're following indexes and those things when you're making your decisions for entry and exit points. But what I also want to get into is that we're starting to see some crappy days and things of that nature, right? Some real sell-offs and things of that happening. And I want you guys to pay attention because the market has been very choppy, a lot of flashes. You'll see a lot of spikes and a lot of dumps, and it'll catch people off guard, man. They'll see things going up and they'll hop in and they get caught with holding heavy bags. So make sure you guys are paying attention with these flash spikes and the flash dumps, okay? Because I would hate for anyone to go in deep and get caught off guard with some huge position and it was just a real quick riding up. So make sure that you guys are following your rules and your strategies when you get in. Rule of thumb for me: anytime I get in a position, I want to make sure that I have 3 reasons of getting in, okay? Some sort of catalyst, looking at the chart, looking for some sort of TA, technical pattern, and then I want to have it confirmation with a couple different indicators. Those are my 3 criteria, and if I doesn't meet that, man, I'm not getting into it. So make sure you get your strategy and get your plan and stick to it. Stay disciplined. Not top news, but some noteworthy things. I really want you guys to pay attention to this Ride to Healthcare rally, man. If you guys haven't noticed, man, healthcare and biotech, they've been having a lot of spikes, and a lot of these have been flash plays too, but you'll see a lot of times if you can get in low, you can ride these things up for a pretty hefty pin. I mean, we saw some things going on. We saw a ride up with SAVA, and we're going to talk about that later, but in the Alzheimer's disease and Parkinson's disease, we saw ANVS, AVXL, and SAVA. We saw those things ride up, right? And then, of course, we saw some sell-off after they did their tests, basically buying a rumor, selling a news type of thing going on. But you're going to start seeing these biotech, man, and these things are coming out. Our technology is up to speed now with the particular science that we have so that we can have more robust production on different things. And you're going to see things like cures coming out. You're going to see things like new machinery, robotic things that can do tiny microscopic type surgeries and all this. You guys need to pay attention to the healthcare industry, specifically pharmacology, biotech, and medical robotics. All right, next up, before we close this out, I want to talk about this right here, but I really want to hone in, and not just because I'm a soldier, but I want to get you guys spun up on some thought-provoking content with this. U.S. evacuates over 200 Afghanistans who help the U.S. as fears of Taliban retaliation grows. Now, I'm not going to get political here because I want to keep this strictly stocks and things of that nature, but look, threat of the bad guy makes us wary, and the U.S. likes to react. And how do we react? We make more robust, contracts within defense contracting companies. So you guys need to pay attention. Lockheed Martin, 3M, Boeing, things of this nature. But also, don't keep your eye off Palantir and things of that nature, especially with cyber warfare and defense contractors on that end. You guys need to pay attention to those as well. All right, now let's talk about some of the movers and shakers and look at some charts. All right, first off, let's talk about AMC, man. All right, look at that. Your bottom level support is red. Your top level resistance is blue. And we're looking at the 5-day chart. All those purple, those are little points where it has to meet, hold, to go on to either the next level up or the next level down. As you notice, the little green right there, that's where we're at currently. And we are looking bearish on a downward trend now. It went down to the lower level, the 36.86, and it bounced up from there, okay? So that is a good sign. So hopefully we don't test that again and we go up to the next level. But if we test that again, that'll really be a defining moment. That'll tell us if we test that again, whether we're going to go down to the red line or if we can go continually up to the next purple thing. So definitely AMC is on our radars next week, and we're going to go over some info with the management team and some news about AMC real quick. So the CEO definitely has been very active with social media and been very big on shareholder participation, especially since the retail investors are the ones that pretty much made it so that he didn't have to bankrupt his company. So definitely he's taking a note and he's addressing, the shareholders having a louder voice on the particular decisions that AMC is going to be making. And also he's talking about the idea that the naked short volumes are extremely high or some option and put call derivatives against AMC. And basically what he does is he's telling the retail investors after the meeting that, listen, he's hearing what you guys are saying. They're paying attention. They're not just going. And basically it comes down to they know that the retail investors are the ones that are keeping them in the game and things of that nature. And they don't want to jack it up, all right? Because as soon as the retail investor feels as though that they're not behind them, supporting them on, the top side or the institutional side, then retail investors are going to take their money and run, and then the company is just going to go, all right? But they also got some things on the horizon where they're looking at different venues, because streaming services is pretty much the way it's going to be for the foreseeable future. Now, we'll have some nostalgia type of things. Drive-in movie theaters, you're starting to hear about those, especially with COVID, because you can't go inside a building and things of that nature. And you know, the movie theater always have that special place to a lot of us 80 kids and 90s kids, because that's what we grew up with. But this newer generation, man, they don't care about that, okay? Because they got streaming services and they got TVs and they can watch the movies all there on their own. So they got to look outside the box, and they got some pretty good ideas, which I think are pretty cool. And so here they're talking about being able to host college football, Premier League, FIFA, UFC, boxing type of things. Now, I'm a UFC fan, right? So just think of this, right? I can spend $65 and watch it at home and whatever. Or say I bought a ticket to go watch a UFC event on a big screen TV with other MMA fans and things, and we can go just nuts and crazy and things of that nature. And maybe it costs me $10, right, to go see this event. Now that's something I'd be interested in, especially a big ticket card, man, and you get some like memorabilia, like some UFC fan things of that nature, and all, and maybe even like a, you know, a UFC fighter coming to different venues that live in the area, things of that nature. Now you're talking my game, okay? So definitely you have my attention, Adam. I like where you're going with this. I hope you can square this away. And he also answers about the naked shorts. He says, as to the existence of so-called naked or fake or synthetic shares or the naked short selling, we are unaware of any information dating these theories. Like he would say anything publicly anyways. Also, we are unable to make any comment on the considerable trading of puts and call derivatives, basically pleading the fifth. So there you go, update on AMC. We're still watching it, still rocking it, holding diamond hands. All right, next up, we're going to talk about SAVA, man. SAVA is my baby, dude. I believe in this company. I'm behind it 100-bit, man. I don't even care that it tanked, all right? I mean, I do care, but I think it's going to rebound just fine, man. Their data was strong. What I'm thinking happened was just profit taking, man. People rode this up. You can look at the chart. The last time it happened, it rode up to, you know, $107, and then you saw the decline, profit taking, and it consolidated and started dipping and coming up and things of that nature, and then went on its next ride up into this point where the catalyst was the Alzheimer's and Parkinson's disease convention. And their data was solid, okay? Solid data. These guys are game changers. But once again, you're seeing the same type of thing, the sell-off, and it was almost the same thing. And I got some numbers to crunch because we know we're talking about some things here that are patterns kind of repeating themselves. And look, I even got a price target where I think it's going to go and exceed for the next time. And our next catalyst is at the end of September, man. They're going to present their 9-month data. And then that's the one, baby. That's the one that's going to give us that phase 3 going into FDA approval, okay? And then that's where SAVA can start taking off, all right? I believe in this company. I'm behind it 100%, man. I'm in deep in this. And you know what? I'm all right with taking the decline because it just gives me an opportunity to buy on the dip. All right, so this kind of looks choppy, but man, just follow with me, okay? On the left, you see the original spike, right? The arrow and that bottom purple, that's where the thing is, 23.75, and it rose all the way up to 115.81, right? Then the red line showing that, you know, diagonal move, that's showing you from the top of the 115 all the way down to 36.08. That was the sell-off, okay? And then the ride back up all the way up to 145.65, and then that orange line is showing you the sell-off down to 66.42. So I got some calculations, and we're gonna see what we got. So the $91.09 was the first run-up difference, okay? So from the bottom to the top, take the top minus the bottom, $91.09 it ran up. All right, this was the first decline. The first decline from the top to that bottom point where it hit the rock bottom was $78.50. Now, this was before the second wave of the second run-up. All right, the second run-up difference was $109.57. So from that bottom level all the way up to the $145, it was $109.57 run. Second run, top to bottom difference, $79.21. Now, I won't lie to you guys. We still might see some sell-off next week, but I'm thinking that we're pretty close to hitting our consolidating area. Maybe a few dips in the next coming, you know, days to weeks and things of that nature. But I'm thinking we're going to stay in this level where we're at right now, this consolidation area. And so here's how I'm getting my price target, just doing some quick math, okay? The second top, the $145 area, minus that one top, the 117, gives us our price target is 176.72. Man, you take those two, you minus them, you add it to the top, and that's where I'm at, 176.72. or higher the next time we got a run up. And I'm thinking it's going to be towards September, at the end of September, when they're going to give that 9-month data, because that's really the one that the big investors are really banking on, that particular data. And once again, here's the chart with all the lines so that you can see all the math that I did for that. So from 145.65 went down to 66.44. We might sit there for a little bit, consolidate for a while we're running into September. But I do believe that come September, sometime towards the end of it, we're going to go past 146 and we're going to see that 175 area, if not higher. Now, a big killer for the past 2 weeks, man, AMD. All right, look at this. I want you guys to understand, okay? Technical analysis, right, exists because patterns can be found within stocks, okay? If the patterns couldn't be found, technical analysis wouldn't work, all right? So we blow AMD out a little bit, okay? We're looking at it from previous pattern that it had a rectangle pattern there in the orange. You can see it right there. And rectangle patterns are good because they show an accumulation of wealth before a breakout, all right? So circle right there has the breakout, and you see the difference between the yellow and the blue, and then the next rectangle pattern, okay? And then the top yellow circle, that's this previous breakout. Now, what I want to hit on is the difference between the breakout points, and that's going to give us the reason for one of the calls I made late today in the market for Monday opening based off of this theory. So first breakout point right there where it passes the EMA 5, right? Okay, we got about $3.33 between the next week. Now, this is a weak candlestick chart, okay? The previous one was a weak candlestick chart, right? So we're looking at close out on Friday, open up on Monday through Friday. That's what these candles represent, okay? But I want you to pay attention to that circle there, okay? That was a Friday like today, and then what it did on Monday is the differences in that orange line. Now, here's how the stock ended today, okay? Now, I want you to pay attention again to the EMA 5 line, that candlestick compared to the last one. That's where we're at, okay? And so I'm thinking that AMD is going to pull back about what it did the last time it had a run like this, and we're going to see maybe a $3 to $4 pullback in the market before the next skyrocket up. And that is why I put a put on AMD. And I think it's going to pay off next week at some time, and I'm going to be able to make my money, and then I can start waiting for the next run up, and I can get my calls, because the price target on this, in my opinion, is $123 to $125. All right, and real quick plug for the Discord, man. In the description is the Discord link. Hit that, sign up, and get yourself into this, man. These are real-time alerts. You see, I stay active. I keep it busy. I'm showing everything. But right there, 2:48 p.m. Central Time, you see I pushed out the AMD put. That's the call that we did, man. That's what I'm in. And, you know, we're going to see what it does on Monday. All right, so we're going to start wrapping this up, man. I got questions from the Frontline, and I got a good one today on the Discord. And we'll give you guys a real quick bottom line up front type of answer, and then we're going to take you guys into the end of the video. All right, and our question from the Frontline is from the Discord in BZTD. Dude, I need some help. I know you're busy, but I managed to wreck my portfolio, which was always small, but now it's tiny. If you don't have time, I understand. If you do, I've got about 180 left to try to recover from. Man, first of all, BZTD, man, of course I got time, and I already answered him in the Discord, but this is what we do, man. We're sharing knowledge to everyone else. So I want to give you guys a little insight like I told him, man. Sometimes when you've done a wreck to your portfolio, look, you need to take a pause, okay? First of all, don't fret. Don't get all stressed out. Lessons learned make us better traders, better prepared today than we were yesterday, all right? So come on Monday, he's going to have that experience of having all these things, and now he's going to have some thought-provoking content to move forward to try to get some things to recover. But how I like to recover from things is that I like to take a pause, I like to reevaluate the situation, and then I'm looking for quick plays, things that got a lot of volume, a lot of opportunity to move quick, and I'm going to show you a couple of them. But these things, you got to move quick, okay? You find something with a good catalyst, some good volume, and you watch it, and it's one trade at a time, okay? You can't have 3 or 4, day trades moving around, man. One trade at a time. You got to get in one, you got to make your money, get out, and then hop on to the next, all right? And you got to be real quick with your stop loss, because you might hop in and might spike up and then tank real fast. Man, you got to have that stop loss on key, man, so you can pull out and put your money somewhere else that's going to make you some money. So let's take a look at some of the things that popped off today that could have helped recover an account, such as this. Now look at IFMK, okay? Cheap, right? $1.07, right? But this thing rose all the way up to $1.68. Now, say he bought into with his $180, he bought as many shares as he could, right? Let's just say he bought 100 shares, right? So he basically spent $107, right? Got 100 shares of this, and it rose up to 168 shares. Man, he made about $60 on just that play alone right there. And that was within what? That was what, at the bell opening, and by 11 o'clock, the thing was spiked, man, and then you're out, okay? Now, if he would have got in anyways, he would have still made money at the end of the day, because look at that, $1.07 it opened, and it closed at $13.50 or $1.35. So he still made about 30 cents per share that he had. This would have been a good recovery stock. Quick in, out, making money, and roll on to the next. Now, AHPI, this has been on our radar if you guys have been paying attention to the watch list, man. You guys know these mask mandates and things of this nature are starting to come again with the Delta variant and people being fearful of getting sick and things of that nature. AHPI spiked hard today, okay? Look at that. It opened at like 567. And it spiked all the way up to 1025. Now, this is a little bit more capital in, but just think of that, okay? He would have spent his money on this thing, or, if you got a low account, you get in on this thing on the low, spend as much as you can, and then you're riding this up, and you can take profit at anywhere. It closed at 825, which is still about a $3 increase from where you started in the morning. So definitely an opportunity for some recovery on these quick in and out plays that have a catalyst and it has strong backing because it's being pushed out. I mean, we got governors coming out saying that, hey, on Monday, you got to have a mask when you go in buildings and things of that nature. So these are things and plays that you need to pay attention to. I know they're not the sexy, cool, trendy plays like the AMD and, the Facebook and the Twitter and all those things like that. But these plays make you money. You get in, you get out, and you can get in multiple times. Look at all those dips, the rise and the dips all throughout the day. You could have been scalping this, making money. So BZTD, hey, brother, thank you, man. I've been there before. In fact, I took a loss on SAVA, so I definitely know exactly what you're talking about, man. But listen, real quick, for everybody out there that's in a similar position, lessons learned, okay? It makes you a stronger trader. Don't just give up when you got a bad position or you just wrecked your entire portfolio. Take a pause, reevaluate the situation, see where you went wrong, look at your lessons, look at the charts, and get back into the fight and find things that you can make back your money and your potential losses, all right? You got questions like this, drop them in the comments, hit me up on DM. Man, I'll put your questions out here and I'll answer the best I can, man. BZTD, thanks, brother. All right, y'all, that's the video, man. I really love doing these videos. This YouTube platform is awesome. We're starting to get some really good feedback. The Discords are popping off. The Facebook group's doing good. Reddit, Twitter, man, we're on everything, okay? I need you guys to come along with us on this journey and be part of the community. Now, listen, I only want engaging people, okay? People that want to actually truly grow and share as a community of like-minded investors and give something for all the things that they're taking, okay? Giving advice, giving suggestions, and even asking questions like we just had on there, right? That's giving something to the community, man, and that's perfectly fine. But if you're just lurking and things of that nature, man, you need to reevaluate yourself and you need to start getting with the program because we're all out here trying to do this together. Now, as always, here at Traders War Room, we look at the stock market like a war zone, the stocks and the sectors. Those are our battles. We're doing it together as a team. Man, we're attacking, destroying, and conquering. Even on red days, man, we're still going to make moves to position ourselves better in the future, man. The idea is to be better prepared today than we were yesterday, and we do that in spades, man. So definitely like, share, and subscribe, and I need you to come along with us on this journey. If all that sounds good and you want to be part of the team, if you're ready, follow me. Let's go to war together.